Hey guys, welcome back to another video. I know we went over a little bit of options contracts the other day. I'm going to try to make this video a lot quicker and a lot more to the point. And tonight we're talking about capital gains taxes. So capital gains taxes on anything that you're buying, like for example, a house or stocks, bonds, whatever. And you will get taxed on the money that you make on those assets. So we'll just jump right into it here. So, capital gains tax, what is it, first of all? Like I just said, it is you getting taxed on the money that you make on an asset. So, here's an example. Let's say I buy $100,000 worth of SPY, which is the S&P 500 index, okay? Or, excuse me, ETF. So, if you were to buy $100,000, let's say you made $20,000 on that. So, the purchase price is $100,000 and you sold it for $120,000. That means you made $20,000. All right, and that $20,000 is what you're taxed on. That's the capital gains. Okay, so we're going to break this down really quick. Two things into two different ways. Okay, the first way is short-term capital gains tax. Okay, now short-term is going to be if you hold the underlying asset for under 1 year, then you will be taxed at a short-term capital gains rate. Okay, we'll get into that in just a second. The second way is going to be a long-term capital gains tax rate. Long-term is going to be anything over a year, so 367 days, all right, or more, like 366 days or more, right? Anything over a year is going to be pretty much qualifying for long-term capital gains. Now, there are some situations that some people have where they're very rare and few and far between, but most people don't have this. Again, this is not financial advice. I'm not a financial advisor, guys. Be sure to do your own research. Go see a professional if you have problems with your taxes or you need answers to that. Okay. So, long-term capital gains, anything over a year. If you hold it over a year, you'll be taxed at a different rate, which is the long term. Okay, so let's get into those. What are they? The tax rates. Okay, so pretty much long term is going to be pretty awesome in my opinion. So that's one of the best things about holding long term. When I personally invest, I plan to hold long term. Right, when I buy something, I don't plan to get in and out of it. Even though, despite the Wade's Trades name, I'm not a trader. I'm actually an investor. I like to hold, really dig into this company, and then hold for the long term, right? So this is one of the advantages to being a long-term investor. And it's going to be different, obviously, based on your filing status. If you're single, married, filing jointly, married, filing separately, it's different. But for the most part, you won't be taxed over a 20% rate, okay? Unless your income is very, very high, and I'm talking hundreds of thousands of dollars a year, $500,000 or more, really. You can look up the regular numbers if you would like, what the actual numbers are, and where your income needs to be taxed at a higher rate. But 20% rate is pretty much standard, so it's actually a pretty low rate. Compared to what short-term capital gains is. So let's hit short-term capital gains really quick. So short-term capital gains is going to be taxed at a much higher rate, especially depending on how much money you make. Okay, so at the end of the year, when you pay taxes, you are taxed at a certain rate based on your income. Okay, and short-term capital gains are pretty much the same as your regular income. So you can be taxed up to 37%. Okay, that is a lot. Up to 37% of those gains can be taxed. Okay, so, oh, and also too, just letting you guys know, when you are taxed, it is only the gain that you're taxed on, right? So if you bought something for 100,000, sold it for 120,000, that 20,000 is what is taxed. Okay, at that, in this case, short term, up to 37%. Okay, but long term, 20%, right? It can be a lot lower, and depending on your income, it also can be even 15% or below. All right, depending on your income, of course. So yeah, guys, so that's kind of the hard and fast. Um, capital gains tax. If you guys want to know anything else, just let me know. But thanks, guys, for listening, and hope that helps you. See ya.